India's market news headquarters. Cutting-edge analysis. Influential insights. Market-moving intelligence. Broadcasting live from the CNBC TV18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. We are coming to you as always live from the CNBC TV18 Motilal Oswal studios, middle of the week, Wednesday morning. And there are no rains. I mean, it was that one day of rains and Monday when we came in, but no rains now. It's not dry, but overcast, sort of rainless kind of Wednesday morning here. But is it going to rain as far as markets are concerned? Because it's been a harvest out there. Day after day, markets have been making newer highs. Yesterday was no different. Where do we go from here? That's the question as we look into earnings and the budget next week. Guys, hi, morning.
Hi, morning. Morning, Nigel. It is a concern, definitely no rains, but it's raining money on Dalal Street, right? I mean, equity mutual fund flows have hit the highest ever at over 40,000 crores. Market continues to be at all-time highs. So we've got plenty of good news on our hands.
Well, that's right. And we've got a new Indian cricket coach as well. Mr.
Yes.
Gautam Gambhir takes over from Rahul Dravid. So, we're two different personalities, but going to do well for the country. So all the best to Gautam.
Oh, absolutely. All the best to Gautam Gambhir, and we look forward to more cups, more championships. Well, let's just take a quick look at what you need to know as we begin another session, this Wednesday morning, that is. So I'll begin where we left off yesterday, which is at new highs for both the Nifty and the sensex. And broader markets, in my book, made new highs as well. I mean, not maybe measured by what the mid-cap or the small-cap indices themselves are doing as compared to the previous highs. But really vibrant screen out there. And we've been sort of saying that every day, smaller the better. I mean, I think that's the motto. And that's not really gone anywhere. People are going down the list to find more and more ideas. Now, overnight, it was absolutely a consolidative kind of price action. So not very much happened. Equities consolidated on your screen, hardly any change, right? S&P, Nasdaq, a little bit higher. But actually under the hood in the US as well, if you look at industrial stocks, financial stocks, they outperformed. Maybe not reading too much into it, but those are sectors essentially which do well during phases of a slowdown, etc. There's some anticipation of that going to happen in the US. Now, on yields, it was a 2 basis point jump on the 10-year. You had the dollar index, which ended slightly above the 105 levels. Fed chairs, Powell's testimony the congressional testimony was being closely watched, but it was very balanced and neutral. Markets did not overreact. So punchline, bottom line from that testimony essentially was that, more good data, which is essentially softer economic data is needed about inflation returning to that 2% target levels or wherever they're comfortable. The neutral rate, it's some more distance to go. So it didn't really do very much as far as the Fed rate pricing is concerned. Etc. It was, we left off exactly there. We, by the way, get the CPI numbers, the consumer price inflation numbers tomorrow in the US, tomorrow evening. And if it slows, if it is soft, I think that should reiterate that Fed cuts are nearing. Maybe in September, we'll see the first cut. But we need data to support it, as Powell yesterday said as well. Oil prices, they slipped about 1%, just under $85 a barrel is where we finally left off at. To circle back to levels here for our markets, Nifty yesterday broke above its previous high of 24,401. Immediately, the Nifty should head to, in the very near term, the daily upper Bollinger Band, which is 24,600, 24,595 to be precise, is the first level. And then beyond that, the targets are about 24,900. Those are extension equality levels. You basically project higher what the last quantum move has been. Supports come in at the 40-hourly exponential average, which is at 24,268. So 24,268 should not be broken on the way down. Now, Nifty Bank also had a positive day, 0.25% higher. It's underperformed the Nifty yesterday, but it's broken above 53,300. Break above 53,357, which is the last high, will confirm a further up move. And on the downside, it should not break 52,246. And again, the daily upper Bollinger Band stands at 54,064, which is the immediate kind of level which the Bank Nifty should get to if the up move really starts to materialize. I just want to leave with this last thing which came yesterday, and we sort of covered it towards the second half of the day, which is, the SEBI expert panel on F&O essentially likely to recommend a few things. Increasing F&O lot size, so basically making it unaffordable for small retail investors who trade 1 or 2 lots. So, increase the lot size by 3 or 4x as compared to the current lot size, which right now, if you want to trade, a Nifty contract or the Bank Nifty contract, is between 5 and 6 lakh rupees. And if you raise it to, 25, 30 lakhs, more than that, I mean, obviously, that will reduce the number of retail participants in the market. And the second is uniform weekly expiries. Instead of, expiries on pretty much every day of the week. NSE contracts expire Monday, Tuesday, Wednesday, Thursday. BSE 2 days a week. So instead of that, all expiries for NSE on 1 day and all expiries on the BSE on 1 day. So that's essentially what we are looking. That's what the recommendation is. We don't know if this will go through, but lots of interest since this is, become such a hugely important part of the market out there. From a stocks perspective, it's not great news for stocks like BSE or brokers, etc. We don't know. Once again, to reiterate, if this will go through, but in any shape or form, the incremental, is going to be negative for exchanges and for other intermediaries, etc. as well. So, but more discussion on this a little later. GIFT Nifty will come up on your screen. That should give you an indication of the kind of day. I don't know, 2.5 odd point change. Will it be limited to that, or will we take up pace once again a little after opening?
I think this has been a really fast-paced market, right? It's been hitting milestones day after day, and yesterday was no different. So in that sense, it is a raging bull market that we have on our hand. And of course, big events like the union budget upon us, looks like the bulls could just continue to charge ahead. The Nifty closed above the 24,400 mark for the first time yesterday. So a lot of milestones are getting hit, definitely. In the last 1 month, it's almost a 7% rally that the market has seen. The Nifty month to month is up 1,200 points in just 1 month alone. And yesterday, as I was telling you earlier, another milestone was hit where, equity mutual funds in India hit an all-time high of 40,600 crores as per the AMFI data. You also had the net assets under management, or the AUM, hit about 60 lakh crores for the first time ever. So there's a lot of money flowing into India. And of course, we had both FIIs and DIIs buy in the cash markets yesterday. So 300 crores from FIIs, about 1,400 crores from DIIs. The Nifty Bank weekly expiry is today, so all eyes will be on that as well. A couple of other things to watch out for would be the Emcure Pharma listing. That happens today. The IPO, remember, was subscribed about 68 times. So that will be a new listing to look out for. And the US markets have closed flat, but the S&P 500 once again has hit another record high. So, day after day, milestones are getting hit. By the way, gold prices have also been moving higher. So it's very peculiar, right? We're living in a time when both equities and, safe haven assets like gold are rising. But I guess that's what liquidity does to a market.
Well, that's right, and a rational thought would be the market should pull back a little bit. But just take a look at the money that's coming in. The SIP is at 21,000 crores. The equity flows are so strong, and the FIs are not selling now. So how does the market fall? Well, time will tell. Well, let's take stock then of what the FIs did in yesterday's trading session in the F&O market. They added longs yet again. They added close to around 10,000 long positions, 10,000 longs for around 1,500 charts, and the long positioning is at around 84%. And for the last many sessions, they've been in the vicinity in that net long position of around 3.5 to around 3.9 lakh contracts odd. And the FIs, they continue to remain net long. Now they have moved to the upper end because of the addition that we saw yesterday, while clients, well, they are net short with close to around 2.7 lakh contracts odd. ITC, that stock seems to be getting its mojo back. And the last few sessions, well, it's popped up yet again. It was doing virtually nothing. And if you look at it in the last 1 year or so, it's actually lower. But just in the last few days, it's moved up a little bit. And it's tending to show signs that it wants to give up the underperformance. Maybe it's playing catch up with its peers. Valuations are fairly okay. And maybe the street believes that, there's no risk with regard to any kind of tax tinkering in the upcoming budget. Those are the data points which explains why the stock has moved up. And on a weightage parameter, well, it's moved up a little bit. Remember, last year it was at around 4.7%. Weightage on the Nifty is what I'm talking about. It moved down to sub 3.5%, but now it's moving back to around 4% after the recent rally that we're seeing. So ITC, that's one stock that could support even going ahead, just going by the data points that we have got. The other one is the HDFC and Reliance. Both of them were battling for the top slot on the Nifty. HDFC is still in the lead. Just a week or so ago, the difference between HDFC Bank as well as Reliance's weightage on the Nifty was around 2.3%. Because of the outperformance of Reliance and the underperformance of HDFC Bank, that's narrowed down to around 1.4%. So that's the reason we're seeing a bit of a narrowing, and Reliance actually looks good for more. So let's see whether or not HDFC Bank can take some kind of support, because we've seen in the last few days around the 20-day MA is where it's hovering after correcting close to around 6-7% odd. Moving to the levels then, well, we're looking at the Nifty Bank, which would be the moving factor today. It ended higher with a gain of around 150 points, but it was underperforming in trade yesterday. Today it plays out the weekly expiry, so that's going to be a bit of a mover. And HDFC Bank, obviously, because of its large weightage, will be in focus. The levels, it continues to remain a buy on dips market, supported around 24,000 odd, 20 DMA as well in that vicinity of around 23,800. But as a stock-specific market, as I said, so I'm looking at Hindustan Copper. Yesterday, towards closing, we said that the data point suggested it could be coming out of the F&O ban. And by the end of the day, that was confirmed. So normally when a stock comes out of the F&O ban, we do see some kind of action. So Hindustan Copper is one stock that I'm looking at. And a cash market stock that I'm looking at is Greaves Cotton. In the last few days, the stock has seen a big increase. I think in the last month or so, it's up close to 25-30% odd. It's moving on very, very large volumes. And the auto theme came back yesterday. It's moving on very, very large volumes. The street is sensing something, maybe in fact something in terms of the numbers, or maybe in fact some kind of action from the company. But the volumes are very, very high, and the delivery-based volumes in July so far is nearly 5x of what we saw in the month of June. So that's a cash market stock that we should be tracking as well.
Okay, Nigel, thanks a lot for that. So plenty of stocks to talk about today, and plenty of market-related data as well that we'll be analysing over the next 2.5 hours. But first up on the equities front, Surendra Goyal of Citi expects a 2% year-on-year Nifty headline earnings growth and flat growth for the Citi universe, excluding energy. He says Nifty earnings are expected at 8% year-on-year and EBITDA growth at 7% year-on-year, while the Citi universe earnings are expected at 14% year-on-year and EBITDA growth at 9% year-on-year. In FY24, he says earnings surprised their expectations meaningfully in all 4 quarters. He says the question now is, can this trend continue? He also says the market will focus on budget announcements, monsoon trends and management commentary on consumption trends. He says domestic flows trends remain strong and post the 26% returns in the last 1 year. He expects the markets to consolidate a bit. He also says they would buy any dips. Their June 2025 Nifty target is 24,400 based on 19 times 1 year forward PE.
All right, well, we have Mahesh Nandurkar of Jefferies who weighs in as well. He says that June quarter should see earnings growth slow by 1 percentage point quarter on quarter to a 16-quarter low of 12%. 12% year-on-year growth. This is for the Jefferies coverage universe. This excludes oil and gas and metals. This is as elections and a harsh summer may have impacted multiple companies. He says domestic, excluding financials, are likely to post 12% EBITDA growth and flat margins year on year. He says pre-quarterly earnings reports suggest slowing loan growth, some rural demand improvement and uneven discretionary consumption. He thinks 20% plus earnings growth for auto OEMs, summer beneficiaries, which is power and AC companies, property and select industrials, is likely.
Okay, let's also get you some money market views this morning. On the rupee, Kunal Sodhani of Shinhan Bank says the US dollar bounced slightly after Fed Chair Jerome Powell remained cautious on rate cuts, despite acknowledging that the US central bank's dual mandate risks are more balanced. Crude prices also cooled off and the dollar found support at 104.7 levels. For the dollar INR pair, Kunal sees 83.40 as a support, while 83.55 acts as a resistance.
On bonds, Neeraj Gambhir of Axis Bank says that the 10-year G-Sec traded in a narrow range of 6.98 to 7.03% with low volumes in absence of any domestic cues. Downward trajectory of US Treasury yields continued in the back of ISM services, PMI, non-farm payrolls and unemployment data. This further buoyed US rate cut hopes in September. Neeraj expects the Indian 10-year benchmark bond yield to trade in the range of between 6.95% to 7.05% and takes cues from CPI data due this week.
Well, a lot of stock-specific action tracked for you. We get to that in just a bit in further detail. For the time being, we run you through the list. We're looking at JSW Steel, Mankind Pharma, Delivery, KDDL, Havells, Infosys, Adani Ports, RBNL and KIMS. So 9 stocks expected to open up in the green, while the lone stock that is expected to react to negative numbers, that is Delta Corp.